Well, folks, if you know me, you know I'm certainly not shy about making long-term predictions on stocks where I think they're going over the next 3, 5, 7 years. But one thing I don't do almost ever is make a short-term prediction around a stock price in the move. And I actually did that this past week, and I told you why I thought Fubo was going to go up between 20% and 40% this week. And nonetheless, folks, it did indeed happen. Fubo did go up almost right in the mid-range of the 20% to 40% number. It was up over 30% this week. And so I want to talk about Fubo here, okay? It's obviously a stock that's been $1 recently, and we're going to talk about if this stock's about to 10x here and go to $10, okay? And I have some pretty optimistic things. We're going to go through all the risk factors with this stock, and there are definitely some risks. We're going to go with the kind of reward case as well. What's the potential upside here, okay? And I can tell you it's a lot more than $10 a share. Let's just put it that way, okay? And so we'll get into all these different details in this video, and I'm just going to take you through everything and lay it out, and you can make a judgment for yourself if you think this is a big opportunity in the market, or if you think it's not. It's certainly a high risk. It's a dollar something stock. Like these sorts of stocks are going to come with risk, right? Every stock in the stock market comes with risk. These stocks certainly come with risk, and we'll talk about that in this video. But nonetheless, folks, there's some interesting things happening here. So I hope you guys enjoyed today's video. As always, something other than talking about the markets here today, something other than talking about Meta and the big dogs and all those, okay, folks? So we're talking a little small cap here today in this one, all right? You're going to have a little bit of fun here. All right, so Fubo, the first thing you got to understand is the kind of the history around this stock, okay? This was a company that went public, and then obviously the stock price soared during kind of Rona. In that time period, we had certainly with kind of stock market bubble 2.0, right? And I mean, the stock, I think it was even higher than this at one point. But nonetheless, folks, it was trading $30, $40 a share plus during that end of 2020, beginning of 2021 phase when, you know, everything was going to the moon, right? And it was just an extraordinary time period. And anything that had growth was really skyrocketed in a massive way. But even outside of that, I mean, you had stocks like GameStop and AMC and all those stocks just going crazy during that time. And we know it was a whole time period that happened, right? And then after that, the stock got absolutely obliterated and just down and down and down and down, right? And even somebody like myself that I thought I got in at a pretty good price, I'm still down significantly on this stock, right? I mean, my average price is $3 roughly for the stock, which is still significantly down from where we're at here, okay? And so it's important you kind of understand the history with this. Now, you got to understand, okay, this is not the first time this has happened. This won't be the last time this has happened. What we just went through, this is very similar to the dot-com bubble, okay? And in the dot-com bubble, you saw countless stocks go down 60, 70, 80, 90, and some 100%, meaning they went bankrupt, okay? Same exact thing has played out over the past 2 years, where we hit that bubble peak right around the end of 2020, beginning of 2021, and ever since then, you've seen a ton of companies go under, a ton of companies go down 70, 80, 90%. There are going to be some companies, and I believe Fubo is going to be one of those, that make it through this mess and go on to prosper and build gigantic businesses, just as we saw in the tech bubble. Not everything went to zero. Not everything went bankrupt in the tech bubble, okay? And so I think it's important to understand this is not the first time this has happened. This won't be the last time. It's probably going to be another 20 or 25 years before we had the next crazy bubble in the stock market, but we will have another crazy bubble in the future where just every craziest idea in the stock market's going up like insane. But that's obviously not been the market. We've been in pretty much the complete opposite of this market now at this point in time, okay? Now, in regards to Fubo here, okay, let's talk about risk reward. Let's talk about where the stock price is likely going. Let's talk about what's going on with their business model, okay? This is pretty much about as good as it can possibly be for Fubo in the short term here, okay? In the first quarter, Fubo exceeded guidance. They posted 22% year-over-year growth in subscribers and revenue growth of 34% for North America. The quarter also marked a substantial year-over-year improvement for their cash usage as we continue to balance our focus on growth and increased emphasis on unit economics, cost controls, and profitability. That's key. And we further strengthened our balance sheet and liquidity position. This is all key. Why is this all key? Well, because, like, how did Fubo go to $1? Think about it. Like, how did it get down to $1 a share? The reason it got down there is because people were scared, like, this company would go under, right? It can't get profitable. Like, you know, their balance sheet wasn't in a good enough place. All these different reasons, right? And so that's how you get this stock price to go down 90%. is by having a situation like that happen, if not over 90%, right? They ended the quarter with $364 million in cash, cash equivalents, and restricted cash. Keep in mind the market cap today is roughly 400 million-ish. As of yesterday, it was like 300 million, if not lower than that. We are confident that our cash balance is sufficient to fund our operating plan until we achieve positive cash flow in 2025. Accordingly, we have no plans to utilize the at-the-market program based on our current outlook. So this is phenomenal deal. News. Okay, so many different reasons. And by the way, we'll talk about later in the video about why not wait till 2025 to buy this stock. Okay, because I think that's an important subject. They're expecting to achieve positive cash flow in 2025, profitability and all those sorts of things. Okay, great. But why not wait to buy till then? But we'll speak about that, okay? But for the company, first off, growth is amazing, okay? And we'll go deeper into the numbers in just a moment. They obviously have a really good amount of cash around on this company, right? Roughly almost its market cap in cash sitting around. And they don't plan to raise any more money. Those are extremely, extremely important things because one of the biggest fears, so outside of bankruptcy, right? What's the next biggest fear as a Fubo shareholder? Do you know it? The next biggest fear is, oh my gosh, they're going to keep diluting shareholder value into, non-existence, right? And just keep diluting, keep raising money, and keep diluting the shareholder value, right? And so that's one of the other big fears. But they just took that off the table. They say we don't need to dilute anymore. We don't need to raise any more money at this point in time. We're good to get us to where we need to get to, essentially, to start making positive cash flow in this company and get this into a positive, profitability story as well. Okay, and so that's massive. That is absolutely massive because that's one of the biggest fears when it comes to this stock overall. Okay, now, in terms of their highlights, meaningfully exceeded the midpoint of their subscriber guidance of 1.15 million and guidance of $297 million. They basically exceeded that by about 135,000 subscribers, and they also exceeded by about $19 million in terms of their guidance. So in terms of the subscriber guidance and in terms of the revenue guidance, obviously very exciting as far as that goes. They successfully expanded their ARPU by about 8%. I think they could do better there. Let's just put it that way. They captured a record 13 million viewership hours from their 100+ FAST channels, which represent an important driver of continued margin expansion. They posted positive gross profit and about 1,075 basis points of year-over-year improvement in gross margin. They still got obviously strides to make there, and we'll speak about that. But nonetheless, folks, they're making up those strides pretty darn fast. Okay. They achieved year-over-year improvements in the net loss of $45 million and $42 million improvement in net cash used in operating activities. They made considerable progress toward their goal of becoming cash flow and adjusted EBITDA positive in 2025. With Q1, I don't even want to go into these fancy metrics like these companies have because at the end of the day, they're still losing a lot of money. Let's not try to spin it. Like, they're making great progress in terms of bringing down these losses, but let's not try to spin it and say, oh, it's this number. No, okay. Consumers are choosing Fubo in greater numbers, both with their wallets and their time and attention. Our growing market share, coupled with over 100 hours per month of users spend on the platform on average, support why Fubo ranks number 1 in customer satisfaction among live TV streaming providers by JD Power. They keep putting that JD Power out there. I've noticed that over the recent time here, okay? Now take it a little step further here, okay? I got to say, these are massive improvements. Revenue is up 34% year over year. First off, how many companies are growing 34% revenue right now? Think about that for a moment. Even my grand old Tesla, my Tesla, isn't even growing revenue 34%. I recall in this past quarter they grew 24%, okay? So when a company's outgrowing my Tesla, that's always impressive, okay? In this environment, that's extremely impressive. Operating expenses were up 11%. Do the math, okay? If they keep putting up these sorts of numbers, revenue is going to be far exceeding operating expenses, and it'll happen in a very short amount of time if they keep basically the operating expenses in line here, and they keep growing this revenue at a 20 to 30% clip, okay? It doesn't take a mathematics expert to understand that. Now, net loss. This is where things get really important, folks, really important. Net loss was down 35% year over year. Now, they're still losing way too much money. They still need to continue to make, obviously, a lot of progress over this next 4 to 6 quarters in regards to that. But this is the type of progress I need to see. Down 35% year over year, that is phenomenal, okay? Net loss margin was up 2,000 727 basis points. Okay, they're making incredible progress here. Still more work to be done, but it's incredible progress nonetheless. Adjusted EBITDA, they made a 38% improvement there. Massive. Adjusted EBITDA margin, 2,118 basis points up on a year-over-year basis. Okay, so the bottom line is this company's making incredible strides in regards to their losses and in regards to their margins. They still have a lot more progress to make over this next 4 to 6 quarters, but things are headed in the right direction, and that's massive. In terms of subscriber net metrics, 22% up year over year in North America. That's very strong growth. Revenue is up 34%. And ARPU was up about 8%, average revenue per user. As far as rest of world business doesn't really matter that much to the company, I'll be honest. Not, at least in the short term. I'm not going to say over the next 10 years it doesn't, but for the short term it really doesn't. Because obviously, look at the revenue numbers. I mean, it's so minuscule compared to the overall business, right? But nonetheless, they grew international 24% subscriber number and 41% in regards to revenue. ARPU was down about 14% for the quarter there. So definitely want to see improvement when it comes to that. Okay. As far as their guidance goes here, they're guiding for fiscal year 23 of $1.23 to $1.26 billion in revenue. And as far as subscribers go, 1.55 to 1.57 million subscribers in North America. That's healthy. As far as rest of world, they're guiding for about 395 to 415 million, or 395,000 to 415,000 subscribers in rest of world. Once again, that's a very small market compared to the North American market, obviously. So good guidance overall as far as that goes. Now, this matters obviously much more for the stock price and much more for where this company's headed, okay? Basically, they're making massive progress on every single expense line item. This is global expenses as a percent of revenue. And they made progress on everything. Selling, general, and administrative, obviously, very nice improvement there. I mean, you're looking at, what were we at here? We are at 5%, 12% down to 5%. General and administrative, technology and development progress, sales and marketing progress, broadcast and transmission progress, and subscriber-related expense obviously continue to come down. They need to continue to make progress on this, folks, but I don't see this changing. I think these numbers are going to get better and better and better, and I think they're going to continue to bring these numbers down every single quarter for it could be potentially years. I think on a yearly basis, I believe they're going to continue to bring these numbers down for years and years, okay? So I don't see that changing. I think that's just going to get better and better, healthier and healthier. So overall, I'm very thrilled when it comes to that, okay? We are pleased with our execution to start 2023, beating our expectations across our KPIs. While the macro uncertainty continues, the second quarter has started well. That's important. I like to hear that. With customer engagement ongoing and advertising accelerating sequentially. I like to hear that as well. It basically means their advertising business is accelerating on a quarter-over-quarter basis. Our increased North American and rest of world guidance for the year reflects our confidence in our continued leadership in streaming. In addition, we remain confident in our path to generate positive cash flow in 2025. We look forward to keeping you updated on the progress. Okay, great. Now, before we go further here, I want to address this question. Why not wait till 2025 to buy this stock? Okay, if they are profitable, if their cash flow is positive in 2025, obviously much safer than buying now when they still have losses. Yeah, they're making great progress, but they're still losing money, right? So certainly if you're just thinking about it from the risk standpoint, then it's much more attractive to let the company get to profitability, right? But I can tell you, if the company is going to be profitable in 2025 and already cash flowing, the stock price is not going to be $1 a share. The stock price is probably going to be between $10 and $20 a share by there, okay? The market sees these companies as they're starting to make progress, and as they make more and more progress and they make their cash flows better and better, right? And they bring down those losses. What you see is as that revenue continues to go up and the business continues to make progress, you see more and more investors come in and buy up shares, which pushes up obviously the stock price more and more and more. It's not like all of a sudden, it would be beautiful if you could wait and then the stock price will go up and then 10x, but it's not the way the stock market works, okay? People see this stuff in the future, right? And that's just the way the market works, okay? So if you think about it from the risk standpoint, it makes sense to wait. If you think about it from the reward standpoint, then obviously you can understand why it's attractive now, right? Now, this is an important question. Why is Fubo attracting so many customers? They have these incredible numbers. Like, what's going on? There's 4 core reasons, in my opinion. As somebody that's studied this company for quite some time now and is a Fubo customer, like, I know why they're attracting customers. First one's easy use. Like, it's so easy. It's like, streaming on your TV. Like, if I want to, like, a lot of times I'll have CNBC on in the background while I work. So I'll just, if I want it on my computer, I put it on my phone. It takes less than 5 seconds and boom, it's right there, right? Even like last night, I had to drive my kids somewhere, right? And they wanted to watch a basketball game and I wanted to hear it over the Tesla. So just pull it up on my phone, less than 5 seconds, basketball game right there. It just, super convenient and easy use is definitely a big factor why they're attracting a lot of customers, okay? This multi-view is one of the coolest things I've seen, okay? And this matters for sports fans specifically, okay? So multi-view is the ability to watch several games at the same time. This is for more hardcore sports fans, okay? People that like fantasy football, people that like college football, college basketball, baseball, where you got any sport where you got a bunch of the games going on all at once. Could be even, basketball fans for the regular season. You got a bunch of games going on all at once, and you want to watch several different games, okay? And anybody that's a diehard sports fan, you know exactly what I'm talking about. When there's like, shoot, man, there's 2, 3, sometimes 4 games on, you really want to watch them. And instead of clicking back and forth the channels, okay, back to this channel, you can basically have it all up on your TV, right? All up on your TV at the same exact time. And so I do that with, this is an 85-inch here, and I'll do it with my Apple TV, okay? I know people are like, what? That's an 85-inch? The walls, my ceilings, it's like a cathedral, okay, in here, okay? It's ridiculous. So I'll have 4 different games all in at once on my Apple TV, right? 2 on the top, 2 on the bottom. And it's phenomenal, right? And so I don't have to worry about switching back in channels and all this stuff. And I can control whichever one I care about the most. I'll have the volume coming to that one. And you can easily just flick it on your remote to whichever game you want to have the volume going over. So that's a huge, huge benefit for sports fans out there, okay? The third reason is football. It's just the best platform if you're a football fan, especially college football, but even NFL, like there's no better platform. Between the multi-view and just like all the different networks they have, which is specific in regards to college football, because college football will be on all these different networks, right? But even NFL football, it's like you'll have games on CBS and Fox and all over the place, NBC. And so football fans is a huge reason. In every single fall time, starting around late August, September, Fubo sees a huge boost up, and all of a sudden people searching for Fubo, okay? And the fourth reason, in my opinion, is they only have one major competitor, in my personal opinion, okay? You can say, well, cable companies and satellite companies are competitors, sure. But in my opinion, they only have one main competitor, it's YouTube TV, okay? And that will be their long-term competitor, okay? YouTube TV is never going to be beat, in my opinion. Fubo will always play number 2 to YouTube TV, in my personal opinion. And that's perfectly fine. They don't need to beat YouTube TV for the stock to be, a 10x, a 50x opportunity here, okay? Now, there's 3 core ways for Fubo to keep growing this business, okay? One is raising prices, which they actually just did here very, very recently. They just actually raised prices. The second one is attracting more customers, which they have no shortage of doing that and attracting more and more customers. And the third way of growing their business is through advertising, right? One is through putting more ads out there, which I have YouTube TV and I have Fubo. And I just try to see like how many ads YouTube TV does versus Fubo. And I can tell you, like, oh gosh, okay, YouTube TV shows dramatically more ads than Fubo. Like, Fubo has a lot of room to basically put more ads when they want to do that, okay? And they will do that over time. And obviously, as you get more ads and advertisers, you'll be able to go up in your ad prices. So, you can obviously command better CPMs. So overall, those are, obviously Fubo can grow in other ways over time as well, but these are 3 core ways that are going to be, in my opinion, like what this company lives and dies by, right? And as far as on the cost side, the main thing they obviously got to keep in control in regards to their costs is just like what they're paying out networks and making sure they're negotiating in a good way. When it comes to negotiating with the networks, right, for Fubo, they're going to have more leverage and power the more customers they attract. That's the bottom line. The more customers they attract, the more leverage and power they have. The smaller you are, the harder it is to compete and really like negotiate for good prices here, okay? So I can tell you, for every new 1 million subscribers they attract over time, it's going to be very impactful. That's just a way it works. The bigger you become, right? Walmart can command the lowest prices. When they go to the company that sells paper towels, and they say, no, that's not good enough. In order to, be in our store, we want to pay blah, blah, blah price. As a paper towel distributor, you got to kind of listen to them, or you're not going to have Walmart as a customer. You're not going to be on the shelves at Walmart, right? That's where power comes in, and that's where, the bigger you are, the more power you have. And so every potential subscriber Fubo attracts over time is very important to them in terms of their cost side of their business as well. And that's something to keep in mind here, right? Now, in regards to this company, the market cap's trading at like $400 million, which is almost like laughable, right? And think about this for a moment. The company has $300 million plus in cash. It is likely going to do between $1.3 and $1.5 billion of revenue this year, right? Now you say, well, they're losing a lot of money. Sure, fair game, but they're obviously making a lot of progress in regards to that, right? Now, to put this into context, you look at Dish Network when Dish Network became a more mature company. Dish Network was able to post up $1 to $2 billion a year in net income as a more mature company, right? Which Fubo's certainly not a mature stage, but by the end of this decade, they will be a mature company, right? Okay. Think about Dish Network, right? That's a company that, gosh, their cost of doing business, right? You ever had actually Dish Network, or even DirecTV for that matter, come and install their satellite dishes at your house, and they got to do all the wiring and everything like that? And think about that. Despite all that, there was still a company that was able to do $1 to $2 billion in net income a year, despite that super expensive crap they had to put up with. Versus something like Fubo, there's no infrastructure. There's no guy that has to climb on your roof and put up a satellite dish that takes 4 hours and then wire it in through your apartment and drill the holes and everything. I've been there, okay? I was that guy that had Dish Network back in the day. There's none of that. So, in my opinion, Fubo long-term will likely build to a much more profitable company than somebody that, let's say, DirecTV did or Dish Network did. Much more profitable, in my opinion. So, but even if you say, let's say they do $1 billion as a mature company in net income a year, you throw a 20 PE on that, which is not a high PE, right? And you're at a $20 billion market cap. You say they're going to do $2 billion in net income as a mature company. You throw a 20 PE on that, it's a $40 billion market cap, okay? So when you do the math around this, as long as they can make it through and they just continue to make progress, bring these losses down, and then get to profitability, the upside is so big, it's hard to even fathom in regards to this one, okay? And so I think that's worth stating there, and it's worth looking at some of these historical companies and looking what Fubo's the replacement of Dish Network and DirecTV and those sorts of old school companies and the cable companies and whatnot, right? That's what YouTube TV is. That's what Fubo TV is, okay? And that's important to understand that, right? Now, this was an interesting comment I read out there on a message board here today. It said, many times when a company stock goes from bad to less bad or bad to good, as I would argue Fubo has, it's a pivotal moment. Fubo is priced for bankruptcy as AMD was a few years ago. I'm not in any way stating, in my opinion, that Fubo is the next AMD in performance, but Fubo looks much better in its latest earnings, right? I bought 2024, 2025 calls, he says. So in regards to that, right, that is an accurate statement in terms of like when you get a company that the story goes from like it doesn't get worse. Like the stock is already priced for bankruptcy, okay? And now they're talking about they're not going to need to raise money anymore. They're making incredible progress in terms of their margins and their profitability, and I don't see that changing. They're attracting tons of customers. And so you kind of put it all together, and it's like, no, it's not going under. And actually, they're going to make it through, and they're going to get to profitability, and they're going to get to cash flow positive, and then things are going to get really fun from there. Because then it's just about how many millions are they going to start making, how many tens of millions, how many hundreds of millions, and then potentially how many billions are they going to start making, okay? So when you look at it from that standpoint, it's pretty darn attractive, right? And you got to remember, right? Companies, not all companies that go under the $5 club are there forever, okay? There's some that go to the gulag and they go into that $5 club and they're never coming out, right? And they don't deserve to come out and they never will come out. And there's certain that do climb out, right? AMD was a perfect example. AMD was a $1, $2 stock back in 2016, 2017 time, right? And obviously, or 2015, 2016. And I remember looking at AMD even back when it was like $1, $2 a share. But I didn't buy it because ultimately I didn't quite understand. I saw that they were, supposed to start making progress on this and progress on that and bringing down losses and getting, but I didn't really understand the full scope of it. For something like a Fubo, I understand kind of the full scope behind this one, right? And so, you got to understand like some stocks, they never come back, and others do. And if you just look at Fubo's numbers, they're coming back, and they're going to come back big time. And their stock price is likely going to be obviously exponentially more than it is today, right? Everything's going in the right direction. Subscribers, revenue, the losses are coming down massively. Everything is going in the right direction, and I don't see that changing. I think it's just going to get better and better and better for the company over the next several quarters. Now, in regards to taking any sorts of risk rewards, right? whether it's a Fubo TV or any other stock you ever think about that's a high-risk stock, right? Money loser. The most important thing I can tell you, as somebody that got bit bad in 2022, right, from going too heavy in these stocks, you got to watch how much capital you're putting in these stocks, okay? Don't risk the farm on them if you're going to take any sorts of risk in any stocks that are these sorts of high-risk, high-reward plays, okay? Because the bottom line is, a lot of them aren't going to make it, right? And some are going to stay in the gulag, which is the under $5 club. And sometimes you're gonna make it out. But the biggest thing is don't risk the farm, because far too many times people are only thinking about the reward opportunity. In something like a Fubo, yeah, the reward opportunity is ridiculous. It's insane, right? But this also comes with risk. They have to continue to make progress on their margins, continue to bring down their losses, right? So there's a risk with that. It's not just like it's a 10x and that's it. It's like it's a 10x or it's potential problems with the company and things got worse, right? So those important to factor in there, right? Very, very important to factor in. And so I just want everybody to kind of always think about that in regards to whether it's Fubo or any other high-risk, high-reward stocks in the future, okay? I appreciate everybody joining me as always. If you're looking to join my Patreon, that will be linked in the description down there, and you get access to see the moves I actually made in the market. There's 4 stocks I made as buys here today in the Patreon portfolio. So if you want to access that, you can check that out. If you want to try to join my private stock group, the private wealth group, you want to apply to join in there, check out the description. That'll be down there as well. Much love and have a great day.